So here's the background then. As we've just told you, South Africa in a technical recession. In Argentina, families are having to cope with inflation running at around 30%. And Venezuela, with all its myriad problems, in a fifth year of recession. So the economic crisis in emerging markets, who better to call on than Professor Patrick Bond, who is a political economist here at Wits University. So we talk about being on the brink or teetering on the edge. And good afternoon to you, Patrick. I mean, how close are we?
Oh, it's good to be with you, Jeremy, and this is the right kind of discussion at this very volatile time, especially because we may have world financial chaos that makes even 2008 look gentle, according to even, say, Larry Summers, the former U.S. Treasury Secretary. So it's a crucial time to think about whether a 50 billion stimulus will work, and if not, what would on the brink mean? Would it mean like September, October 2008, where 10 years ago at this time, not just Wall Street melting down, because really the catalyst were these real estate bubbles in the US, but there were so many vulnerable banks around the world. People are asking that, even today, because of India, where they're shadow banking, the sort of off-balance sheet assets have been under threat, or Turkey, which really took a hit a couple of weeks ago. Lots of volatility.
So the vulnerability then that you talk about, whether it be the bank or the broader economy, what does that mean for you and I?
Well, I'd say definitely the Reserve Bank helped us by not raising the interest rates, which I had feared. And the reason is the rand has strengthened a bit. It was 15.3, now we're strengthened to about 14.2 today. So that probably persuaded them, that move to strengthening, that they don't need to raise interest rates to bring foreign currency in. If the interest rates went up, at the same time we have inflationary pressures, which are especially from the oil price, then we'd be feeling it. We might be hurting on our mortgage bonds. I think we're also at the stage where we might again see a rise in the non-performing loans of ordinary people just unable to pay the regular installments. So we had about 50%, there were about 20 million borrowers, and about 10 million were 3 months or more in arrears at the worst 10 years ago. Now it's a little bit more like 30%.
Simplistically, we keep asking ourselves how we find ourselves in this position. Is it simply 10 years of malfeasance and corruption, or simply that we are held hostage by what is happening in the rest of the world, or perhaps a combination of both?
It is both, because not only is the malfeasance here on our balance sheets of the state-owned enterprises, and those, of course, bleed into our guarantees. So if we do have defaults, there was a fear earlier this year Eskom might not make payments. Yes, then the fiscus will be in bad shape, and we have a junk rating effectively for most of our debt. So we are paying about the fourth highest interest rate in the world. So the international investors who want to come here, they're getting quite a good reward. But let's look also, Jeremy, at what was done 10 years ago, first by George W. Bush and his team, then Barack Obama, and then the whole rest of the West. They threw money at the problem. It wasn't a fix, it was a Band-Aid. The Band-Aid is being torn off by just how fragile these financiers have become. They threw the money through quantitative easing, just money blown into the economy, pretty much zero interest rates, and then bank bailouts. And they never really got the full deep economy, the real sector, up and running. So it was like a sugar high growth. The US is the best example of that right now. Strong growth, low unemployment, but you look under the cover, there's a lot of rot.
So Friday, we have President Ramaphosa announcing a stimulus package with something in the region of 50 billion rand. You've called it tokenistic.
Yes, because now we're really looking at a much bigger push we needed, nearly a 5 trillion rand gross domestic product, or the size of the annual output. So 50 billion is a little boost, you know, sort of a 1% boost. But you know, we're
better than nothing, surely.
Yes, of course. But you know, don't forget that he took away. Well, I should be precise. Malusi Gigaba, as finance minister, took away about 42 billion from infrastructure for poor people, the basic water, sanitation, the schools, even the school toilets, in the last budget. That was the austerity. Even Business Day called that savage. I hope that the 50 billion will include lots of givebacks to ordinary people. I'm worried about the big mega project infrastructure, which tends to be white elephantish, tends to be corrupt. We saw Transnet and Eskom with the Guptas. And then we've also got a big question. Are we exporting into a world economy with big mega projects? The two biggest, a big rail line from Lephalale down to Richards Bay, and a big port expansion in Durban, at a time the world economy is deglobalizing. In other words, the trade to GDP ratios are shrinking. This is before the Trump trade wars. It's going back to 2007, the peak. We've actually seen less demand for South African goods as the commodity prices crashed. And the Durban port, I can tell you, has just been stagnant.